You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good to be back, Jim. You know, it's with more excitement and trepidation that we talk today. I'm pretty excited. I'm a little bit frightened, but mostly excited.
And why are you so excited? You were telling me that Rick Rule has maybe taught us some lessons about how to make wealth.
He really has. I listened to a presentation, an audio presentation that he made on October 3rd, I believe it was, and it impressed me at the time. And then a few weeks later, I went back and tried to find it, and I was able to locate it. And I learned so much more by listening the second time. But I'll tell you, I think Rick Rule is among a select handful of people that can teach us about how to get rich. If we try to figure out what it is that he follows that works for him time after time. And if he's correct on this one, it'll be the fourth major sell-off in probably the last 15 or 20 years that he's profited from. And each time he's gone to a new, much higher level because of the techniques that he's followed. And this will be true of Eric Sprott and other people as well, too. But when I listened to this, and he mentioned that when you get to an extreme in the market and you're looking at a company or a series of them that you feel, they've really gone down the tube, but you wonder if you should still hold them or add more, you go back and you revisit your premise. Why did I buy this company in the first place? And you ask yourself, is that still valid? Is the management still good? Is the project still good? Does the company still make sense? And if you believe that your beliefs were wrong, then you get out. But if you still see subjectively and objectively that you feel that you are correct, you either hold on or buy more. And he used a very interesting example of Paladin Resources, which apparently was one of the biggest scores he ever made. They financed this little uranium company at 10 cents, went to 12 cents, and then it went to a penny. And so that's exactly what he did. He went back, revisited his premise, and held on and bought more. And 4 years later, Jim, Paladin advanced from a penny a share to $10. So I would suggest that taking the time to revisit your premise could potentially pay off in a pretty big way.
Of course, you've always said do your research to make sure that what you've invested in is still a valid company that's still well run.
Exactly. And we've talked about this for a long time, and I think what Rick did was to put it in a way that was more accessible to people and a lot more precise than what I've said in talking here, but it's the same idea. And what it did, it reinforced in a big way for me that I was doing something that was correct fundamentally and in terms of a meta principle, which is something that will work in a variety of circumstances. And last week, Jim, I did something like this by a pure coincidence. It was a uranium exploration company that I've held for quite a while. I went back. This company, I've been in and out and adding positions and taking other, out positions since almost $2 a share. That company dropped down to around 3 cents last week. And so I went back and revisited my premises, and I looked at what was going on in the news, and I found that a big hedge fund was dumping millions of shares at this company at any price so that it could survive itself. And I realized that it wasn't the company that was at fault. It was simply market sentiment going against it. And so using Rick's premise, after revisiting mine, or I should say his technique, my premise seemed to be sound, and I went in at limit and bought more at 3 cents, just above 3 cents. And by the end of the week, by good fortune, that portion had doubled, and it's now backing and filling. And this particular position isn't going to make me a millionaire, but it certainly lowered my cost of the position, and it proved what, at least at this point, what Rick is talking about, that if your premise is valid, you either hold on or add to it.
You said you should have the courage to invest in winners.
You really have to, and if you look at the very best ones that you think are going to survive, and then you focus on those. And one of the things that's coming up now, and this is a minority opinion, but several people, and Rick alluded to this in October, that we could very well see a final capitulation, which is hard for people to believe given that we've had this water torture over 4 years, and many of these stocks have lost 80 or 90% of their value, even the best ones. But it is possible, and I personally am planning for the possibility because I find it is something that could take place. And if it does, Jim, I believe it will happen before the end of this year. And by definition, a market capitulation, a full capitulation, what Rick and people at Casey Research and what David Morgan calls, is where you have a high volume drop where the price of virtually everything in the sector gets hammered. It doesn't matter whether it's good, bad, or ugly, it gets taken to the cleaners. And if you have some money, and if you have the courage in that position, then you add to your position at something even below stupid cheap prices. And if you're correct on your choices, or even if you hold on, but you've got good positions, when it's over, that marks the absolute low for that cyclical bear in this case, and then it's going to be upward and onward for the next several years. So I would suggest that at minimum there's a 50-50 chance that this could occur going into the tax loss selling season, especially for Canadian investors. And if it doesn't, personally, I still have a position, but if it does, I have a little bit of cash to buy these things. And I'll never forget the one stock that I've used so many times as an example in 2008. And this is what I learned because at the time I'd committed all of my funds, and that was Nova Gold. And I watched that stock trade at 35 cents. And within 1 year, Jim, it had gone up to $14. And I didn't have any money to put in it, and I don't have a position in it now, so I don't need to have a disclaimer about it. But the point being, I could have chosen dozens of other stocks and used that same example because almost all of them, the good ones, went up anywhere from 10 to 20 times over the next year or so. And I think potentially we'll have the same thing going on here. It may take a little longer, but I think stocks that are bought in here that are quality stocks, with or without, but certainly with a full capitulation sell-off, have the potential to go up at least 10 times in order to get back to where they were 4 years ago if they're a quality stock. And if we go into the public mania phase that David Morgan has talked about so often over the years, where you get 90% of the entire potential profit of the move during the last 10% of the move, which could be several months over a 15-year move, then you could see 20, 30, 40 times on the good stocks in terms of appreciation. And to me, that's a darn good risk-reward ratio.
We'll have more with David Smith right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to David Smith, Senior Analyst for the Morgan Report. David, what do you believe we can take away from the lessons we've learned today?
I think there are a few things that our listeners can think deeply about. First of all, listen to the masters, which is what we talked about today. Listen to Rick's talk on audio. Take some notes. Think about it. See if there's something in there that you can learn. Choose one or two meta principles that they use, and the meta principle is something that works in a variety of situations and is likely to give you a positive outcome. Don't forget that at market extremes, sentiment is all that matters. So it doesn't matter if the gold-silver ratio is out of whack, or if you're oversold at a certain point, or if there are no more bulls left. Sentiment is the only thing that matters because everything gets tossed out, good, the bad, and the ugly. And rationality is not what matters. You just need to know beforehand the companies that you think are good and are going to survive, and don't pay attention to what the market thinks, because at that point the market has gone completely bonkers. Then the next bullet is to follow the Boyd cycle, which we've often talked about over the last couple of years. And people can learn more about it by looking up the Boyd cycle. But essentially, it's observe what's going on around you, orient yourself in relationship to what's going on around you, decide what you're going to do based upon the research you've done, and then finally act. And once you act, let go. And I'd like to give you this little quote, which to me is very powerful. It comes from a novel called Cloud of Sparrows. And this is the way I'd suggest acting when you've decided that you're going to take action on something. And it goes, when attacking, await the right moment. When waiting, be poised like a boulder on the edge of a 10,000-foot precipice. When the right moment manifests itself, vanish into the attack like a boulder plummeting into the void. So once you've made that decision, you literally turn off the computer, you do what you decided to do, and you walk away and you let what happens happen. because you no longer are going to even try to influence anything. You're going to wait and see if you've been vindicated. And the very final point, which a lot of people might think has no relevance to our discussion today, but to me is the most critical thing of all to think about, and that is once you've been given an opportunity like this, and once you've acted and you believe you are correct, express gratitude for the opportunity that the market has given you, or the seed within that opportunity. Because as Dr. Joe Dispenza says, gratitude means the event has already occurred. So by being grateful for being given the opportunity to step up to the plate, you're expressing a powerful belief that you're doing the right thing, and your whole body language and your temperament and your pulse and everything else will change, and you will know that no matter what happens, whether it works or not, you had the courage to follow your beliefs and then stand aside and let the future determine the correctness of your actions.
David, thanks a lot for being on the show.
You bet, Jim. It's been very good talking to you today.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.